Welcome. In this video, Xcn coin is stuck. Will the boom come? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When the chart is examined closely, a clearly observable descending channel structure stands out. This channel formation shows that the price has been moving in a downward trend for a certain period, but within a specific order and discipline. Descending channels are among the most critical structures in determining market direction and forecasting potential future price targets. These types of patterns offer great opportunities for trend-following investors in technical analysis, as price behavior becomes more predictable within such channels, and strong support and resistance reactions usually occur at the channel boundaries. Currently, the price is positioned above the midline of this descending channel. This development can be interpreted as a highly positive signal from a technical standpoint. The middle region of a channel is often considered a balance zone, and as long as the price does not remain trapped below this level, the path toward the upper band remains open. Breaking above the midline is a key clue indicating that buyers are starting to gain strength. The price is trying to break free from downward pressure, and the momentum is slowly turning positive. In particular, in these types of channels, a break above the midline often confirms the upward force of buying pressure stemming from previous lows. After such a breakout, the price generally tends to move toward the upper band. This scenario currently appears quite likely on the chart. The fact that the price is holding above the midline suggests that this band may now start acting as support. In this case, price consolidation above the midline may soon lead to increased momentum and a move toward the upper boundary of the channel. The upper band of the descending channel is considered a potential target area for investors. This zone has historically acted as a significant resistance line where the price faced selling pressure and retreated multiple times. However, in the current scenario, the price breaking above the midline and maintaining that level increases the likelihood of reaching the upper band. Especially when the price stays above the midline with volume-supported candles, the continuity of this movement becomes more probable. In technical analysis, a move away from the channel's midpoint to the upside typically fills the gap up to the upper limit, which is a strong indication that the price may continue moving toward the upper band in the near future. Additionally, the current price positioning reveals an increase in positive reversal signals within the descending channel. The price forming higher lows compared to previous ones and moving toward the midline, then breaking above it, could signal a positive change in trend strength from a technical perspective. This creates a structure that indicates increasing investor confidence in the market, and a shift where upward movements begin to dominate over downward ones. If this positive structure continues without being disrupted, the journey toward the channel's upper band becomes not just possible, but a highly probable scenario. Moreover, this upward move within the channel could also provide early signs of a potential trend reversal. While descending channels usually form in downtrends, if the price generates strong upward reactions within the channel, an upward breakout from this structure could occur. And the price being positioned above the midline currently reflects the presence of this potential. Especially if the price reaches the upper band from here and breaks above the channel with sufficient momentum, it could mark the beginning of a larger uptrend. In addition, when the price rises above the midline in such channel structures and begins to consolidate, this is often interpreted as a strength-gathering phase before a breakout. Even if the price moves sideways for a while at this point, the potential for an upward breakout remains alive. But we can't base our analysis solely on channels. Let's take a look at other metrics too. Stay tuned. When the chart is carefully examined, a technically critical area clearly stands out. In particular, the marked red line acts as a significant support level in this price chart. This line represents a zone where the price has previously stalled, buyers have concentrated, and the market has gathered strength. Therefore, maintaining this level is extremely important. Current price movements are taking place just above this support point, and the price has not yet fallen below this line. This indicates that there is still a prevailing positive sentiment in the market and that buyers are showing resistance at this level. Such support zones are extremely valuable for investors because reactions from these areas are typically strong and backed by high volume. The fact that the price has reached this level could also be an important signal for bottom formation. This is because prices usually make critical decisions at such support points. Either buyers take control and the price makes a bullish reversal, or if the support breaks, a short-term correction phase may be triggered. However, in the current situation, since the price continues to hold above this red line, positive scenarios still remain valid. Especially when we look at the recent candlestick formations, there are some slight upward reaction signals emerging from this area. This shows us that buyers in the market have not yet given up. On the contrary, there may even be investors who prefer to open positions from this level. At such critical support levels, prices often take a breather, determine direction, and if market sentiment is positive, an upward bounce from this area occurs. Therefore, it is very important for investors to observe price behavior at this level closely. As long as the price remains above this line, the current structure is likely to stay positive. Looking at past price movements, it's evident that this level has been tested multiple times and has consistently encountered strong buyer responses. This highlights the technical importance of this area. Since these types of levels are also psychologically trusted zones by investors, the quicker the price rebounds from here, the stronger the signal it produces. Every successful defense of this level increases market confidence, laying the groundwork for healthier future rallies. If the price starts to move sideways at this point and initiates an upward move, this can also be interpreted as part of a base formation. This not only represents support defense, but also suggests the possibility of a potential bottom formation. In such a setup, as long as the price stays above the red line, it gradually builds strength, starts forming higher lows, and signals an upcoming bullish move. Of course, a scenario in which this line is broken to the downside should also always be considered technically. But unless this scenario actually occurs, meaning unless the price closes below this line, the bearish case remains purely speculative. In technical analysis, the main focus should be the sustainability of the current price structure. In the current outlook, since the price is still above this support, the scenario remains positive. Especially if there's a breakout to the upside from this level with strong volume. It will clearly show that the market has regained confidence and that buyers are stepping in forcefully. At this point, one of the most important strategies for investors is to remain patient and carefully observe the price's behavior, because such key levels often represent decision points, and that decision may result in either a strong upward breakout or a short-term correction. However, since the price is still moving within the positive zone in the current situation, we can say that the upward possibilities remain stronger. When we carefully examine the chart, we can clearly see that the Bollinger Bands are narrowing and the price is starting to squeeze within these bands. This squeeze is considered a very valuable and important indicator in technical analysis, because when we look at similar contractions in the past, there are many examples where such band narrowings are usually followed by strong and directional price movements. Therefore, the current Bollinger Band tightening can also be considered an exciting and promising development for investors. A narrowing of the Bollinger Bands indicates that the volatility of the market is decreasing and that it is approaching a decision point. In such cases, the market stretches and compresses like a spring, and eventually this tension is released in one direction, resulting in a big move. This is called a volatility explosion in technical analysis. Looking at the current outlook, the probability of this squeeze being resolved upwards seems quite high, because both the overall trend structure and the signals given by other technical indicators prepare the ground for a possible upward breakthrough and indicate that this squeeze may end in a positive direction. We should look at the Bollinger Band occasionally. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments. Analyze the risks correctly and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.